Hi guys, welcome back to the channel. Welcome back to another walk and talk. Again, another bit of change of scenery here, just out in the countryside, just going for a bit of a walk, and it's a fantastic opportunity to talk crypto, and so that's what we're going to do. We've obviously seen some interesting movements in the space. If you haven't yet caught up with the Bitcoin video that I did earlier this morning, then that's probably a good starting place to go check that out and see what I think is going on from a technical analysis point of view. But today we're just going to kind of chill out a little bit and talk more about cryptocurrency more generally, and specifically talk about making money with crypto, whilst I wade through what appears to be a very muddy field here in the middle of nowhere, as it feels sometimes. It's great to live on the outskirts of a city because you have access to all of this, but it does come with some drawbacks of maybe needing to own some Wellington boots and all that kind of good stuff. Some better footwear is probably required. But let's talk a little bit around cryptocurrency and making money with crypto, right? Because there's many different ways to make money with cryptocurrency, whether that is buying, dollar cost averaging, as we were talking about yesterday, and building a HODL portfolio, okay, which is a fantastic way, by the way, guys, of kind of securing a long-term position in cryptocurrency without any of the hassle of kind of worrying about tracking all those bullish or bearish patterns on charts and things like that, and keeping a close eye on the technicals, right? But dollar cost averaging, as price pulls back, is a fantastic way to build a position with minimal amount of knowledge regarding technical analysis, which is why it's great, right? It means that so many retail investors can take advantage of that kind of situation that crops up as bear markets crop up, right? So obviously you have that as kind of your kind of go-to staple, right? But there are many other ways as well when it comes to making money with cryptocurrency. So I'm just trying to wade my way through some of these muddy patches. So hodling and DCAing strategy is fantastic. Okay, we can't ignore that. Then of course you've got the trading. There's some fantastic ways to trade. If you are technically minded, then trading cryptocurrency can be incredibly profitable, right? If you're able to kind of draw charts and keep an idea, or and track the ideas of bullish or bearish patterns in the charts, then you're able to make a pretty healthy profit from trading cryptocurrencies. Whether that is spot swing trading, which is a fantastic way of going as well, or leverage-based trading, meaning you can make money if it goes up or goes down, which is what the majority of crypto traders do. Okay, you do find some wealthier players, we talk about these from time to time on the channel as well, who generally are spot swing traders. And you can see these in the on-chain analytics quite well as well. There's, for example, typically professional level traders have pretty sizable positions, and they are able to trade in and out using swing methods, right? And so you can see this with like 100 Bitcoin or more per wallet. Pretty much the wallet never changes. The number of wallets that have 100 Bitcoin never really changes. It kind of swings in and out of the market, but it's very flat across the years. And so when it comes to trading, there's many different ways of going. You obviously have the spot elements where you can spot trade in and out, and of course the leverage-based trading. Let me get rid of that bug. And when you have leverage-based trading, you can make profit if the market goes down or goes up. And you can basically, what they call short, predict the market is going down, or go long, predict the market goes up, right? And obviously we are pretty familiar with this kind of trading elements on the channel. Historically speaking, in the bull market, we don't generally do too much leverage trading. It's more spot-based trading because the market's going up, right? So you can hold the asset and it will appreciate a lot more. In a bear market, it's more profitable to kind of leverage trade, but you can of course make some pretty healthy profits using leverage in a bull market as well, if you really wanted to. So we obviously have leverage-based trading. We obviously use a number of different exchanges for this. All the links are in the description down below if you haven't already checked those out. And one of the things I would say is it's a great strategy to ultimately make sure that you are registered on as many of these exchanges as you possibly can, right? Because only when you're in a bullish market do you actually realize how difficult sometimes it can be to exit the positions that you've built. And by having access to as many of these exchanges as you possibly can, it'll actually give you the maximum amount of options when the time does come to actually liquidate your assets. So making sure that you have an account with, Bybit, 𝗕𝗘𝗪, 𝗕𝗪𝗂, OKX, etc. is going to set you up to be successful later down the line. All the links are in the description below. They are affiliate links that do understand the risks involved in trading and all that kind of stuff. All the terms and conditions, they're all listed below. So just check them out if you haven't already done so. And make sure you have those accounts set up, because I do think it's going to be very important in the next bullish market. And then of course there's the lesser known ways of making money in crypto. And that's actually a really small hill that's got me out of breath. I need more exercise in my life. So the other ways, lesser known ways of making pretty decent returns on your investment is something called staking your crypto. Now, staking cryptocurrencies does actually several different things. It helps protect the blockchain, okay? So basically by delegating to the pool, or delegating to pools and to validators, encourages more validators. The more validators that turn up essentially means that there's better security around the actual blockchain itself. As in, you can't see a 51% attack, for example. Okay, now here at Cheeky Crypto, we have several different validators. We have a validator for Cardano, we have a validator for 𝗲𝗪, and we have a validator for Findora. These are the three validators that we're currently running, but we are looking at more as well. If we take a look at the price action of Link most recently, you see it's moving rapidly to the upside. And there is also the ability to stake your Link, which means you'll earn a nice passive return on your investment. So let me talk about that in a little bit more detail. Let's take Cardano as an example. Our Cardano stake pool, or validator, is actually one of the better performing ones across all Cardano pools at the moment. And this is pretty much just because it's actually quite a small pool at the moment. The larger pools sometimes have problems with saturation, as in there's too much ADA delegated to them, and therefore they actually see a lower return overall. So sometimes more is not better. And in the case of our Cardano pool, I'd actually quite like to say it's one of the better performing ones, earning you a 3% net return over an entire year. That might not sound like a lot, but if you're into ADA and you're just holding it and you haven't been staking it, you've been missing out on 3% returns. And so that's a great way to kind of hedge against the downward move of the bear market, but also a great way to make sure you have more ADA in the future. There are, of course, all the details to stake your ADA in our pool down in the description below, so do go ahead and check that out. And of course, you've got 𝗲𝗪, which I think is earning about 9% every single year. Again, you just buy your 1 tokens, get them delegated to the 1 pool, and you'll be earning 1 tokens back as a reward for delegating and securing the network. Again, 9% is very, very good across a year. I'd like to see any bank make you that. And then, of course, we have Findora. This is our latest stake pool that we set up. And this one's earning, I think it's about 16% annually at the moment. Okay, so again, a very lucrative way to earn some passive income whilst just investing in your favorite cryptocurrencies. And we may in fact actually set up some more pools in the future as well. So I kind of want to put a video out there today just to kind of say that there's many different ways to make money in the crypto space. Not just buying and holding all the way through to kind of leverage-based trading, and in fact earning passive income on your existing holdings and existing positions as well. So if you haven't yet kind of taken advantage of the various different offers and setups of accounts and different exchanges, why not check those out? They're in the description below. Make sure you do set yourself up for success in the future by making sure you have access to as many different exchanges as you possibly can. And of course, why not check out the pools that we're run here at Cheeky Crypto as well, also in the description below, and start earning a passive income. If you do happen to own ADA, 𝗲𝗪 or Findora and you're not yet delegating it, you are missing out on some pretty decent returns. So why not check that out? Link is all in the description below. Guys, I think I'm going to wrap that video up here. If you have found it useful, informative, smash the like button. If you're new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and I'll catch you all in the next one.